Hi guys, how's it going? Are you currently looking to buy a home, but you have no idea where to start? Maybe you've heard a story from a friend telling you, hey, we went into escrow and this happened, that happened. We ended up losing a couple $1,000s and didn't even get the home. Maybe you guys have certain stories or experiences like that that are kind of preventing you from making the move to actually purchase. Hi, how's it going? My name is Eric Loya, and I'm a California real estate broker and lender for Father's Plan Realty here in Southern California. Today, what I wanted to talk to you guys about is understanding the home buying process from start to finish. Let me put it this way. Do you guys, well, I guess a plane's a bad example given that we're in the coronavirus right now, but have you guys ever been on a plane and the pilot doesn't even tell you where you guys are going or what the experience is going to be like or how many hours it's going to be? I mean, what if you got on a plane and you never knew what turbulence was and the pilot knew it was going to be a turbulent ride but never even mentioned it to you? You guys would probably be scared, worried and thinking that you might die because the plane's shaking and you don't even know what it is. Um, I look at home ownership in the same way. I think it's really important that a future homeowner and buyer understands the process, that they understand what they're getting into, what aspects of negotiation they're going to engage with, and the give and take that's going to be involved throughout the process. I've seen it happen time after time again. People get frustrated and they want to quit escrow and leave escrow, or they're not well prepared and they don't understand how contingencies work, and they end up losing thousands and thousands of dollars. So I'm here to explain the process to you, start to finish, 5 different stages. I'm going to break down every stage in a separate video so I don't blow your guys' mind up. So with that said, let's just jump right into step number 1, and then we'll go from there. I'm going to share my screen with you guys here. All right, the home buying process explained. So here is our trip from start to finish, the 5 different stages. So you guys see the higher level overview of what we're going to be doing. I actually snagged this from realtor.com. They have a process outline. Also from my own experience, I'm going to share these different stages with you. So the first part of buying a home is securing financing. Then once you get that squared away, you're going to make offers. Once the offer is accepted, you have your due diligence period to make sure everything's okay with the home. After that, you move towards closing and funding the transaction. And then there's some after closing things that you want to take into consideration as well. So in this video, I'm just going to go through the first stage, which is securing financing. So we're going to go ahead and get into that. I'll move my little head over here. Okay. All right, so securing financing, really the first place that you guys want to start is with a personal credit check. We're going to go do it. You know what? I'm going to be honest. Let me see here. Yeah. Okay. We're going to go into that in a little bit. So personal credit check, then you're going to ask yourself, how much home can I realistically afford? You guys need to understand what your budget is and what your means are. We're going to dig a little bit deeper into understanding debt to income. So how do you qualify for a loan? What are some basic factors that we look at? We're going to talk about PI versus PITI. So mortgage payment versus your true monthly payment. I'm going to share a little trick with you on the mortgage calculator. We're going to do a quick review of the document checklist of everything you're going to need to gather for your lender. And then from that point forward, you'll be ready to go with a loan application with your lender. So let's get right into it. So a personal credit check. So a lot of people don't know, but you actually get 2 free credit checks per year of your own credit without it impacting your credit whatsoever. So if you're going to be buying a home, which is usually the largest purchase most people make in their lives, you want to start with the credit check yourself before you go through a lender and determine you might not be qualified. So you can use really any credit bureau. There's 2 of them. There used to be 3, but there was a huge data breach, and that company is no longer. It's still around, but it's not looking at as heavily. But Experian and TransUnion, you can go to those 2 places and receive a free credit report. Credit Karma. There's also Mint, which is an application on your phone. Money management apps in general. A lot of them will offer check your credit, see what's going on. I personally use Credit Karma. They keep me updated and give me tips on how to increase my credit, as well as I think like a weekly credit number review, which is pretty cool. What you want to do with that personal credit report is you want to review and confirm the recurring debts. So you want to take a look at the report. Most of what you're going to see are going to be education bills, any loans that you have, like with monthly payments. So that could even be, well, credit cards are separate, but loans, car loans, stuff like that, home loans. And then also what we call trade lines or credit cards. So these are all different aspects that will go into consideration when determining how much home you can afford. So you just want to take a quick look and make sure everything's correct. Make sure there's nothing random on there that has nothing associated with you, because these are all things that they may become hiccups down the road once you do get into escrow and purchasing a home. All right, so how much home can I afford? So understanding what we call debt to income in the lending game, or DTI, is an important factor in understanding how much home you can afford. So really what that means, you take all of your total debts on your credit report, and monthly debts, and you divide it by your total monthly gross income. And if it's just you applying for the loan, it's just your income. If it's you and a wife or a co-borrower, it's going to be a combined income. Okay. Now the goal is we want all of your debts to be 40% or less than your total income. So let's go ahead and talk about this example to give you an idea of what we're looking at. So this example is based on two borrowers who make $60,000 per year or $5,000 a month. So what we're looking at is a combined income of $10,000 since there's two borrowers. I'm just randomly throwing out a $2,500 mortgage payment just for the example. $1,500 in recurring debt, so that could be credit card payments, education bills, car bills. We don't look at cable or phone bills or anything like that. Most of this stuff that's on your credit report does not show that. So we're just looking at your credit report. So when you add the $2,500 and the $1,500, you get $4,000 per month combined debt. And if you're looking here, you get 4,000. So we add it all together, 4,000 debt divided by 10,000 income gives you your 40% debt to income. So that's a simple way of, a little more complicated way, I should say, of how we go about determining that from the lending side. So if you guys want, you could do it yourself before you even go through a lender, so you can get a better idea of what's going on. Another thing I wanted to share with you before we get there, actually, you can actually find home affordability calculators, home affordability online. It's really cool. There's one actually on realtor.com, which is pretty good. It's really straightforward, right? So let's say, right, so if we're going back to that 40% rule that we were talking about, what was a $2,500 monthly payment. So if you have a $2,500 monthly payment, this is giving you a general interest rate. You're kind of working backwards in this sense, right? So we found out what your monthly payment can max out at. This right here will show you, okay, so if I can only max out at $2,500 per a month in my payment, that would equate to about a $530,000 purchase price on my home. Now, if it sounds complicated, of course, you're going to be working with a lender, such as myself, hopefully, in which we can walk you through every step of the way. But I wanted to give you guys a bigger picture of what that actually looks like. Okay. So that's how you find DTI. So the next aspect is the documents that you're going to need to secure a pre-approval. Now, here's the thing. There's two different versions of an approval that you might hear of. There's a pre-qualification and a pre-approval, or what we call a DU, or desktop underwriting approval. The latter is more valuable and will make a stronger offer when you do go to make an offer on a home. Pre-qual is just a conversation based on what you say. A pre-approval is verifying the hard documentation that you see here, and actually going through the process of finding out exactly what that dollar amount is. So the pre-approval is what you're aiming for when you're securing financing in step one. So you'll see a completed 1003 application, basically just goes over your income history, employment history, asset and liabilities. Driver's license, social security card, bank statements. We need to verify income for a large purchase like this. We got to make sure that you're financially stable. If you had some issues with the coronavirus, maybe you were furloughed, you can talk with me. There are certain factors that we are taking into consideration with that, and instances in that case where we can still work with you if you did get your job back. Really, the whole goal in phase one, or the first step, is to obtain what we call a loan estimate. So once you supply these documents to a lender, they're going to run your credit, and then they're going to go through the application and come out with a term sheet. It's going to show you the interest rate, the loan amount, the monthly payments, and the APR, which the APR is a quick number that's going to combine all of your lender costs together. So rather than going line item by line item and being like, man, well, he charges 500, that person charges 1,000, X, Y, and Z, the APR is a bottom line number, everything considered. Technically, the lower the APR, the less cost of the loan. The APR will be different from your interest rate of your 30-year fixed, or whatever loan you decide to get. It'll be different from that interest rate. So just keep that in mind as well. So that's step one, guys. We're going to get into step two a little bit later here in another video. You can go to YouTube on our Father's Plan Realty channel and take a look at it. Again, if you have any questions, go ahead and shoot a message here below, or shoot me a private message, and I'd be happy to work with you guys. Take care.